For more, let's bring in Bryce Doty. He's Senior Portfolio Manager at CIT Investment Associates, and Chris Zaccarelli is Chief Investment Officer for the Independent Advisor Alliance. Great to have you both here. Bryce, can the rally keep going?
You know, a lot of good news is baked in there. You named three really strong things, and that employment report of 271,000 jobs was a blowout number. Way more than people expected, and that's also driving or fueling the president's approval rating. I know there's certain benefit from the impeachment process and State of the Union and whatnot, but when you look at behind the numbers, Trump's approval rating for handling of the economy is the second best in history for any president. And so I think a lot of people might be saying, if it's not broken, don't fix it. Maybe he gets reelected. So the two are closely combined, how well the economy is doing, the jobs number and whatnot. But you're right, if that's all baked in,
right,
where do we go from here?
Right, Chris, it reminds me a little bit of the melt-up we saw after the president's election when you had bank stocks surging, you had a lot of optimism about his Tax Cut and Jobs Act, and then we moved sideways on the averages for a while. Could we be in a period similar to that now?
I think that's possible. I mean, really, the markets are moving higher for all those reasons that were mentioned. You had coronavirus fears, which seem to be receding, at least in the short run. The impact to global GDP may not be as bad as initially feared. You've got good economic data coming out, whether it's the jobs number this morning or the 50.9 number above 50, meaning expansion in terms of the ISM manufacturing number. So there's some good economic data. There's been pretty good earnings across the board, and you're really seeing a receding of some of those fears. So I think that's what's pushing the market higher right now. But going forward, really what's going to move the market higher is going to have to be increased earnings. Multiple expansion can only get you so far, and I think, to your point, we could go sideways if there's no catalyst to push the market higher from here.
Meanwhile, Bryce, you're looking at some of the areas that have been hit lately, including airlines, cruise lines, energy. Where specifically would you bet there, and why should they be ripe for a rebound?
Well, with things feeling as good as they are, it does seem like you need to take some money off the table, and some of the areas of the stock market have done really well because, as you mentioned, while there is some optimism on the coronavirus, it's not over. There's still going to be damage to airlines, to the leisure areas, and including energy as well. I think there's going to be some opportunities there. You look at the cruise lines that have had their ships kind of quarantined. I mean, those are the names to kind of zero in on. You look at the airlines that have canceled the most amount of flights. That's another area where you probably are going to find some opportunity. I don't know that you need to do that now. Now might be a good time to just kind of have a little bit of cash, put some money in treasuries or something like that. So in 2 to 4 weeks, when it looks like the infection rate is slowed, that's the time to probably move into those sectors.
All right, and Chris, while Bryce might be leaning into some of the beaten down areas of the market, you're leaning into the winners, including tech and consumer discretionary. We've got $4 trillion market cap companies out there right now. How big can they get?
No, that's a great point. I mean, there clearly some of the stocks have run really far, really fast. And again, on a broader range, I would say, technology in general, there's still some opportunities. The indices themselves are getting pushed higher maybe by a few companies. But if you look beyond those companies, even within the technology sector, let's say within semiconductors, you've got that 5G super cycle that's about to start. I think a guest on a prior show had talked about that, and we really believe in that. We think between 5G, artificial intelligence, cloud computing, that's just starting to happen right now. And we think there's a pretty big wave there, which is why we like semiconductors. Also, looking in consumer discretionary, we'd be looking more in the home builders and more in the home improvement space. You've got record low unemployment, you've got wages that are rising, and you've got interest rates that are relatively low. We think those factors will allow you to find some good opportunities in which would otherwise be a pretty good upward trend. And so we're trying to be a little bit more selective and not just as broad brush, let's say.
Guys, thank you both. Appreciate it today.